Look, you're not just watching Michael Saylor gamble with billions. You're watching a live A and B test of what your money might looks like 5 to 10 years from now. Because whether you like him or not, you're already in one of two camps. Camp A, sitting in save cash and bonds, slowly getting drained by inflation. Camp B, taking visible volatilities in scare assets like Bitcoin, hoping to outrun that drains. And look, as I'm recording this, Bitcoin's back in the mid 60s, roughly around 65 and 66K after a green day. So that volatility cuts both ways. The uncomfortable part, doing nothing, is still picking a camp. You're just not admitting yet. So the real questions for you isn't just, is Saylor crazy? It's, is he blowing up his company in slow motion? Or is he showing you in real time how the futures of corporate money and maybe your portfolios is going to work? Let's break this down. You know what's keep bothering me about this whole Michael Saylor situation? It's not just that he's buying a tons of Bitcoin. It's that he's doing it as a public company CEO, sitting on a massive unrealized losses and under full Wall Street scrutiny. And instead of backing off, he's basically saying, yeah, let's buy more. And if you're trying to protect your saving, growing your stack, or even just not to get left behind by this system, you kind of have to ask, what does he think he sees about the futures of money that most people are still ignoring? Because whatever that answer is, it directly affects what happens to your dollars over the next decade. Let's start with what he's actually doing. Saylor Companies has turned itself into the biggest corporate Bitcoins holder in the world. We're talking about massive position, hundreds of thousands of coins on the balance sheet. This isn't a 2% hedge. This is a strategy. And yes, on papers, that position has been deep in the red at times. We're talking about billions in unrealized losses. For normal CEO, that's a nightmare. For sailors, that's just part of the plan. And this guy posts hints like add more dots. And every time he does that, markets start watching because it usually means one thing. They're about to buy more Bitcoin. Now, if you're a normal investor, this isn't just a curiosity. This matters because if he's right, it means your safe cash and bonds might be the real risk. If he's wrong, it means going heavy into Bitcoins at a corporate level could be the fastest ways to blow up shareholder value. Either way, his move or stress testing the systems that your money is sitting in. Most people tell themselves a simple story to avoid thinking about it. They say he's a maxi, he's with too much conviction, big ego, big risk. That's all that is. It's a comforting story because it lets you ignore the implications. If it's just one crazy guy, you don't have to change anything. But here's where things get uncomfortable. The more you study what he's doing, the less it looks like random gambling. And the more it looks like deliberate model for how to turn a public company into a Bitcoin accumulation machine. And that model, if it's work, doesn't just affect Saylor, it affects everywhere. It affects how every futures company might treat cash, debt, and Bitcoins on their balance sheets, which means it affects how your stocks behave and what happens to your purchasing powers as this game played out. Let me walk through how different this is from a normal company. A traditional company earns cash, pocket in dollars or short-term bonds, avoids big swings, and call that prudent risk management. The entire idea is don't rock the boat. Saylor Companies is doing almost the opposite. They tap the capital markets, issuing stocks, raising funds, using structured instruments, and then they funnels that capitals into Bitcoin over and over. They're not just holding BTC, they are converting their privileged access to financial system into more BTC. That's a completely different philosophy. Instead of treating cash as the safe default, they are treating Bitcoin as the base layer they want to own, and fiat as a tool they're willing to burn through to get it. Now, ask yourself, if more companies start doing this, what does that do to the supply of Bitcoin? what does that do to the values of your cash you're holding? That's why this isn't just Saylor drama. It's a preview. Here's the big mental flips he's making. Most people are terrified of volatility. They rather hold some things that feel smooth and stable, even if it's slowly losing purchasing power. Saylor is more afraid of being stuck in a melting asset. He's basically saying, I'd rather take visible volatility in something scarce than invisible death in something that's constantly being diluted. That doesn't make him automatically right, but it makes his strategies coherent. And if that worldview turns out to be correct, then the pains he's taking now, those big unrealized losses, might just be the cost of grabbing a massive slice of fixed supplies assets before the rest of the system fully wakes up. In other words, he's paying in short-term pain for potential long-term dominance. The uncomfortable part, you and I don't get to watch this play out from a safe distance. We're in the same system, the same inflations, the same monetary policy. If he's right, the cost of doing nothing with money is way higher than it feels today. Now, of course, there's another side to this. This is a public company. Investor can bail, regulators can ask questions, short sellers can attack. If Bitcoin has a brutal multi-year downturn or never reaches the valuations he's betting on, the consequences are huge. Shareholders get crushed. The companies become the cautionary tales, and Bitcoins on the balance sheets get treated like a toxic ideas for a generation. If that happens, a lot of people will say, good things I stay in cash. Good things I stayed away from this. So there are really only two ways this story ends. Either we look back and say, Saylor destroyed the companies chasing digital gold. Or we look back and say, Saylor was early. He front-runned a monetary shift everyone else was too scared to act on. And your portfolio, your cash, your convictions are going to land closest to one of those outcomes, whether you take actions or not. Doing nothing is still a bet. It's just a quiet one. Now, what makes this even more intense is the time factor. If Bitcoin's adoption keeps moving, ETF institutions, maybe even more countries, then the window where you can make a meaningful allocations before it's fully priced in doesn't stay open forever. Every halving, every regulatory green light, every big buys that take coins off the market, that's a bit less cheap optionalities for latecomers. Saylor is acting like that window is closing, and that's the part that should make any serious investor pause and think, okay, even if I don't go as extreme as he is, what does doing nothing looks like 5 or 10 years from now? Because if the answer is slow bleeding in fiat and underperformance versus hot assets, that's not safety. That's just a different kinds of risk. So we're here, I land on this. And this is just me thinking out loud. Same as you. If Saylor's wrong, his company becomes the warning label. If he's right, his playbooks become the manuals other companies follow. Either way, what he's doing forces us to confront a question most people avoid. In a world of endless money printing, debt, and inflations, what do you want your future selves to actually be holding? A balance of safe assets that slowly lose real value, or exposure maybe sized to your risk tolerance to something volatile, scarce, and outside the traditional system? Saylor has answers that for himself loudly. And you don't have to copy him. You don't have to agree with him, but you can't pretend his answer doesn't matter for your money. Because one day we're going to look back and the story will be written. Either this was the most reckless corporate Bitcoin experiment ever, or it was the early blueprint for how serious players protected themselves from a broken monetary system. And between now and that moment, you get to choose. Are you just watching the story or quietly deciding what role your money plays it in?